Welcome back to my daily report market videos with me, Richard, Pay Market Analyst at Hantec on Friday, 7th of June. Payrolls Friday, looking at euro dollar, which rallied sharply yesterday on the ECB monetary policy meeting. The ECB was not as dovish as perhaps the market had been anticipating. Didn't talk about, in its full guidance, it didn't talk about the prospect of a rate cut. So subsequently, the euro rallied, and what we've seen is that rally now back to this downtrend channel resistance, downtrend that's been in place since September, and comes in. If I zoom back in again, comes in around the today's high, around 1280 today. This is it's clearly a key moment for euro dollar. It's had a mild close above 1265, which has been a basis of resistance for the past 5 weeks or so. So that was a positive move yesterday, but just slipping back again today. But you look at the MACD lines, are they beginning to get traction for a move above neutral, which would be the first real time that's happened since early February. The RSI failed time and time again at 60. So 60 is a level that needs to be breached on a decisive basis on the RSI. Now, this is obviously the downtrend channel, and you've also got the overhead supply. Well, it's a pivot, let's call it a pivot around 13 big figure. Old floor, repeatedly used as a basis of support through the turn of the year into Q1. And then since then in April, a basis of resistance, and again in the past few days become a basis of resistance. So 113 big figure. So you need to see the market closing decisively above that 113 big figure mark to really suggest that this downtrend is being broken and the market is moving through resistance levels and starting to engage in a recovery. You'd see the RSI in the 60s then. You'd also see MACD lines positive. So that's a key, this is a key moment again for euro dollar. Is it going to be turning through and going through resistance? Well, you've got the hourly chart, which a little bit disappointing, the fact that the last couple of rallies have failed under 70, and you've got MACD lines which come back low. You could argue this is now coming into negative divergence territory on MACD lines on the hourly and also RSI. But until you went decisively below 40, I don't think you're really looking that corrective. And to be honest, you've got this 1220 pivot on the hourly chart as well. 1220 consists quite often in the past month has been a turning point, and again a basis of support. So moving into payrolls, if you hold on to 1220, you're still looking fairly positive, I think, on euro dollar. It's just that you need to see euro dollar through 113 figure to really engage in continuation of the rally. So with that in mind, I wish you good luck in your trading. I'll speak to you later.